Hey everyone, welcome back. Ready to jump into another deep dive?
Absolutely. Always ready to dig into the latest market happenings.
Well, today we're trying to untangle this whole is the economy really as strong as they're saying mystery. Like, are those headlines we keep seeing for real, or is there something else going on?
Yeah. Gotta love a good economic puzzle, right?
Exactly. And our main clue for today's deep dive is this Bloomberg article, Stock Market Today, Dow, S&P Live Updates for October 17. It's hot off the presses, so let's see what kind of insights we can squeeze out of it.
Sounds good to me.
All right, so first thing that jumps out from the Bloomberg article is this unexpected jump in retail sales last month. Like, way bigger than anyone was predicting.
Interesting. You'd think that would have the market doing cartwheels, wouldn't you?
Right. Usually more spending means happy shoppers. Happy shoppers mean a healthy economy. So what gives?
Well, here's the thing, and this is where it gets kind of tricky. This surprise spending spree has actually got some investors feeling a little uncertain.
Uncertain. How so?
Well, because everyone and their dog was convinced the Fed was about to slash interest rates. Like,
Yeah.
it was a done deal in a lot of people's minds. But now,
Now they're not so sure.
yeah, not so. It's like everyone was lining up for a clearance sale, and then the store turns around and announces record profits.
Uh-huh. Yeah, it makes you do a double take for sure.
It does. And this is where those swap contracts the Bloomberg article mentions come in.
Swap contracts. Okay, you're going to have to break that one down for me a bit.
Sure thing. Basically, they're like bets on where interest rates are headed.
Oh, okay.
And after this retail sales data came out, let's just say a lot of those bets suddenly looked a whole lot different.
So it's like the market's giving the Fed some serious side-eye right now. Like, hold your horses with those rate cuts, buddy. We need to see what's really going on here.
You got it. It's a classic case of the market sending mixed signals.
Totally. Consumers are out there spending like it's going out of style. But Wall Street isn't quite ready to break out the champagne just yet. Definitely a recipe for some head-scratching, wouldn't you say?
Oh, absolutely. And speaking of mixed signals, did you catch how the S&P 500, even though it hit a new all-time high briefly, ended up closing the day pretty much flat?
Yeah, I saw that. Even with all this supposedly good news, investors are still holding back. What's making them so hesitant, do you think?
Million-dollar question right there. But remember, the market is always trying to get ahead of the curve, right? And right now, there are a lot of what ifs swirling around. Yeah,
Right.
like inflation's still stubbornly high, right? Geopolitical tensions are all over the place. And then you've got the election coming up, which always throws a wrench into
Yeah.
things.
Talk about a recipe for uncertainty.
Tell me about it.
And like to make things even more interesting, Bloomberg actually throws in some specific company examples too to show just how wild this ride is right now.
Oh, yeah. What were some of those?
Well, like Travelers Coast saw their stock jump up a crazy 9% after they announced some crazy good profit.
Wow, 9%. Must be nice.
Right. But then in the same breath, you've got Elevance Health Inc. And their stock takes a nosedive, like an 11% drop after they had to lower their expectations for the year.
Ugh. Yeah, that's rough.
It's like whiplash. Up 9%, down 11%. Makes you wonder if anyone knows what's going on.
And it just goes to show, you can't just look at the overall market picture. You got to look at what's happening in these individual sectors to really understand the dynamics at play.
Right, like maybe Travelers being in the insurance biz actually benefits from all this uncertainty. People get nervous, they want more coverage.
Exactly. Could be a case of bad times for everyone else, good times for us.
Exactly. But Elevance Health,
Yeah,
who knows? Maybe it's some healthcare specific thing going on there, rising costs, new regulations.
right. Could
What
be
have
a
you.
whole other can of worms.
Totally. But stepping back for a second, looking at the bigger picture again, Bloomberg spends a lot of time talking about how like divided the experts are right now, but what's going to happen?
Oh, yeah. How so?
Well, you've got some who are saying this strong economic data we're seeing, that means the Fed's going to hit the brakes on those rate cuts they were talking about.
Interesting.
But then you've got others saying, nope, Fed's going to stick to their guns, slow and steady reductions. And it's like, who do you listen to? It's like trying to figure out if it's going to rain when you've got two different weather apps telling you two totally different things.
Yeah, that's never fun.
Right. And to make things even juicier, there's this quote from one analyst at LPL Research that Bloomberg includes, and he makes this really interesting point. He says, even though these September spending numbers look great on paper, we should be paying attention to what's going on with unemployment. Like, are people who are out of work, are they finding it harder to make ends meet? And that could be a sign that things aren't as rosy as they seem.
Ah, so even if people are spending now, they might not be able to keep it up for long. Like they're running just to stay in place.
That's the question, isn't it?
It is. And on
Oh,
top of that, you've got Bloomberg dropping this little nugget about the VIX, the CBOE volatility
oh
index.
yeah, that's the one that tells you how jumpy the market's feeling, right?
Exactly. And guess what? It's higher than its average for the year.
Higher than average. So is everyone basically bracing themselves for a market earthquake or something?
Yeah, it's a bit like that. When that VIX starts climbing, it basically means investors are expecting some bigger price swings, more uncertainty, like they're buckling up for a potentially bumpy ride.
And are we talking like metaphorical bumpy ride or like actually doing
Oh,
something?
no. People are making moves. And this is where it gets really interesting because Bloomberg calls out these systematic funds. They're like the big spenders in the market, right?
Okay, yeah, the ones with the deep pockets.
Exactly. And even they're getting a little skittish. They're actually pulling back on their stock exposure because of this whole volatility thing.
See, that's what gets me. Because if those guys are hitting the brakes, that's got to be a sign that something's up right. Like they know something we don't.
Makes you wonder, doesn't it? And here's the thing about this whole situation. It can be a self-fulfilling prophecy. You
No.
know what I mean?
Not really, got to be honest.
Okay, so think about it. Like if enough investors get spooked and start selling off their stocks, what happens?
Everyone panics.
Well, yeah, there's that. But it also actually creates the very volatility they were worried about in the first place. It's like everyone's scared of a ghost, and all that fear actually ends up summoning one.
Okay, now that's spooky. So where does that leave us then? It
Mm.
feels like we're walking this tightrope between all these good vibes about the economy,
Yeah.
consumer spending's up, and then this like underlying anxiety that something could go wrong at any minute.
Nailed it. That's the tension that Bloomberg's article really gets at, this push and pull between short-term optimism and those longer-term question marks.
Right, like everyone's out there living their best lives, but for how long?
Yeah, will they be able to keep it up if inflation keeps eating away at their wallets? And then you've got the election looming. How's that going to shake things up? Big question marks all over the place.
So bottom line, it's not as simple as saying, hey, retail's up, we're in the clear.
Yeah.
There's way more to the story.
Right, 100%. It's like trying to navigate with a map that's constantly being redrawn. Like, yeah, you've got a general sense of where you are, but the landmarks keep shifting.
I'm getting a serious headache just thinking about it. So for those of us who aren't, market experts, what's the takeaway here? Should we be stashing cash under our mattresses or popping bottles?
I'd say avoid both extremes. Best thing you can do, stay informed, stay curious, and don't be afraid to ask questions.
Love that. Knowledge is power, baby.
Right. The economy is a wild ride, my friend. No easy answers.
You got that right. All right, everyone. Thanks for joining us on another deep dive into the market madness. Keep those eyes peeled, and until next time, stay curious.